Hey, T3 Live traders and investors. Matthew Buckley, call sign Whiz, the chief options strategist here at T3 Live, and looks like the market's having a little bit of a relief rally, trying to get off the mat here. With the S&P and the Dow at least positive for now. We briefed yesterday a lot of the reasons behind the sell-off. Whether it was Russian courts threatening to seize foreign assets that are on Russian soil as kind of a smack back at sanctions. We had a Fed head out of Dallas, Fisher, saying, I think you guys are crazy. We need to start raising interest rates a hell of a lot sooner than expected. We had some China stuff. You name it. There was a lot of things baked into yesterday's sell-off. And the durable goods orders. Wow. I mean, that's just, it talked about falling out of bed. But also Blue Crest. Blue Crest Capital Management, one of Europe's largest hedge fund firms, laid off a bunch of stock traders in the U.S. on Thursdays. Started liquidating a bunch of their investments. And I got to tell you, when somebody of this size starts ditching these guys moved about 2% of the NASDAQ yesterday with a lot of what they unloaded. Why do I bring this up? That should freak you the hell out. If this size firm, and like I said, there was other catalysts behind. It was just a kind of a cauldron, as we called yesterday's SITREP. There was kind of a cauldron swimming around of stuff, but it's got to scare you when somebody of this size can move the market that much. So when you think that you're going to hear somebody yell fire in the back of the theater and run out, you're wrong. The big guys in the back of the theater, when they start to smell a little smoke, they're gonna walk out. They're gonna take their Johnny Walker Blue, their cigar, and just kind of walk out with their cigars. And then one of us poor suckers is gonna go fire. So markets go down a hell of a lot faster than they go up. So you have got to be careful. You have got to be hedged. Yesterday, with the VIX being up 21%. We had a bullish double vertical that I had on, and I took it off for a profit of about $1,800. Yesterday, I sent out a trade alert getting bearish on volatility, okay? And again, hopefully you've written this down by now. When vol's cheap, you buy it. When it's expensive, you sell it, okay? And the VIX being down there, at 12, 13 recently, incredibly, incredibly cheap. But when vol is expensive, you sell it, right? So there's the spike, as we've seen recently, up around the 16, 17 level. The VIX doesn't stay elevated forever, folks. It's me on the treadmill, right? On a 10 incline at 10 miles an hour. I can do it. It ain't going to be for long. I got to get back down to my resting heart rate here. So these are layup trades, folks. I got to tell you, when vol's cheap, you buy it, you get long. When it's expensive up here, you sell it. And we do bullish double verticals on that. Twitter. This is our bull put spread, weekly bull put spread, up about $1,800 since Monday. I think we still have, about $330 to go. SPX bull put spread, the 1980, 1985. Man, that missile that came out of nowhere yesterday obviously blew this thing out of the water. So we're probably going to see a max profit of $2,100. On our Twitter vertical, we're going to see a max loss of about $5,100 on our SPX bull put spread. But we also, last week, put on a bear call spread. You remember that? The 2015-2020? We closed that one out for about a two grand profit. Okay, so net, we're going to be down about $900 for the week in our weekly options trades, which I got to be honest with you, is pretty damn good when you see what happened in the market yesterday. That violent and that big of a move to only be down about $900. But more importantly, our hedges in our portfolios, that VIX bullish double vertical made $1,800, and we had an SDS bullish double vertical that made $2,800. So even though we lost about $900 in weekly options profits, we gained that and more with our hedges. Folks, you got to learn how to trade options. You can potentially make money up, down, or sideways. So that's kind of the quick debrief in our Friday market wrap-up of our positions. Final, Q2 GDP in line with 4.6%. That was kind of as forecast right there. And also University of Michigan consumer sentiment. It was a little bit of a miss, but it's still at a high there. The University of Michigan consumer sentiment is holding near its 7-year highs. Remember, folks, that's consumer confidence. It's not necessarily high, hard data. I got to tell you, being on the front lines, I'm actually in Nashville today working with one of the largest temp agencies in the United States, and it ain't necessarily good. So I see a lot of canaries in the coal mine. So a lot of these numbers I take with a grain of salt because I actually put eyeballs on it. But again, the GDP surging to 4.6%. Well, the government. Gotta love the government. Can't hit the ball over the net. What do? You lower the net. Personal consumption. This is the big thing. When you actually dig into these numbers, the personal consumption numbers is what really has me worried. So that consumer confidence, well, Whiz it? Yay! It was a miss, but it's still kind of up there. They were looking for a 2.9% rise in that consumption, and we got a print at 2.5%. Okay. So, and also let's be brutally honest here. One of the reasons that this GDP printed the way it did was what? Obamacare. Okay, and I covered that. You got to go back on the TGO site to watch some of the reasons why that print the way it was the last time. Okay, so a lot of good stuff going on. Even though it wasn't the best week in weekly options, I don't like losing $900. That's why we have hedges in our model portfolios, is to prevent getting fully taken out here. We have ejection seats, and they work. They work as advertised to save your life. Okay, I got to run. That's our Friday market wrap up. Have a great weekend. I'm going to be down here in Nashville over the weekend working with that temp agency, and then I'm going to be in Dallas working with AT&T at the beginning of next week. So have a great weekend. Happy hunting. Make sure you hedge, and I'll talk to you guys on Monday with our Monday market outlook from Dallas.